Okay.
Hello and welcome to Three Questions with my buddy Jack Wang with us from Innovative Advisory Group. Easy for me to say. Welcome to the show, Jack.
Thanks, Kevin. Thanks for having me on.
So Jack, we're at the end of the year, so now we got to talk taxes. So how does taxes and the college conversation, how does that all go together?
Yeah, taxes, believe it or not, actually play a large part in the cost of college, right? And so people don't often think about that. People talk about how expensive college is, right? Whether it's $10,000 or $80,000, but people also have to remember that money we pay for college is with after-tax money. So if you think about it, whether you pay sort of out of pocket on an ongoing basis or you saved it in an account and then pay for college, that's after taxes, right? So you earn the money, right, from your job, then you pay taxes, and then from that leftover money, you save or pay for college, pay your mortgage, buy groceries, et cetera, et cetera. So it's a big deal because people say like, well, college is, $100,000 over 4 years, it would, 25,000 a year. Well, that could really be as much as 130, 140, $150,000 that you had to earn to pay the 100, right? And so if you think about a more expensive school that might be 75,000 a year, 300,000 across 4 years, that could be as much as almost $500,000 across 4 years that you had to earn to then pay taxes and then be able to pay college, right? So it's a huge factor in the cost that most people don't think about.
I never would have gave that a thought until you just said it now. After all those shows we've done together, when you said it, I was like, where's he going with this? And I'm like, that's where he's going. Yeah, because like you said, you think about it, hey, our son Jack's a genius. He got in, to a $75,000 a year school. You're thinking, okay, I make enough, but you forget about the tax implications. Like, oh man, I have to make way more than that to get me down to the 75. So never would have thought of that in a million years. So how do we use taxes to our advantage then in this situation?
Yeah, so again, not something that people tend to think about, right? People, as a general rule of thumb, people pay for college two ways, right? You either save the money up front, like, the day your kid was born or something like that, or people think about sort of taking on debt afterwards, right? Like, well, I didn't save up front, so I guess I just have to borrow. But you can minimize at least some of the tax costs. And so there are certain tax credits. So for example, there's the lifetime learning credit and the American Opportunity Credit that some families may be able to take, which by the way is a good time to just throw out the disclaimer that this is for educational purposes only. Please make sure you talk to your own tax person or financial professional.
Well, I mean, to your point, someone would be watching the show a year, 2 years from now. And like I said, so as always, it is for educational purposes.
Right, absolutely. But it's also understanding sort of how the tax code works and how income is taxed versus capital gains, parents versus kids. So, there are times where you want, if you can take advantage of some of those tax credits, that obviously helps, right? It's not going to pay all of 75,000 a year, but it's going to help a little bit. But there are strategies, like sometimes there's gifting strategies. So if you're going to sell off investments to pay for college, you as the parent may not want to do it. You may want to gift it to your kid and let them sell because they're at a lower tax bracket. For business owners, there's lots of strategies there to indirectly make college expenses essentially tax deductible to the business. So there are all of these things. Now, having said that, most people don't think of it that way. Most people think of taxes like, right, here's my proverbial shoebox full of receipts, fill out the form, where do I sign? Hopefully I get a big refund. The reality is, if you really put some planning into this and think about these different aspects, people can actually save a lot of money through taxes that they otherwise would have had to pay, but now they can use that tax savings for college. So definitely it can significantly reduce the sink.
So Jack, how does taxes and student debt go together?
Yeah, so if if you're sort of too late up for that stuff because your kid's already through college and now they're dealing with student debt, there's still a number of tax provisions. So right off the bat, if you're within a certain income range, you might be able to take advantage of a student loan interest deduction, right? So the amount of interest you pay on student loans, a portion can be deductible right off the top. Okay, so that's good. But there's also things like watching out for loan forgiveness. And so in particular, it used to be that certain types of loan forgiveness would be tax-free and others would not be. Now, actually, under the current regulations, all types of loan forgiveness are tax-free, so that if you do qualify for loan forgiveness, you don't have to pay taxes on that forgiven balance, which is nice, right? But then also with repayment strategy, with federal loans, there's what's called income-based repayment. Sometimes it's based on an individual tax person's tax return. Sometimes it's based on a joint tax return if you're married. So depending on what your goal is in terms of getting out of debt, right, and your tax situation, it might pay to file jointly, it might pay to file separately, or something else. So, there can be a lot of strategies in this to take the sting out of the cost of college or the cost of college debt.
So it's really important to obviously sit down with a tax planner, with your college advisor, to hear about these, because I don't think most people know about any of the things we spoke about today. They just look at it as it's 75,000, that's what I have to pay, or the payment is $300 a month, and that's what we have to pay, Jack. It's not nearly as simple as that, right?
No, not at all. And no, and so really, as much as we all hate paying taxes, right, and we hate filling out tax forms, why not use some of these provisions to our advantage so we can lower the cost of college or take the sting out of paying for debt or something like that? But it does take some planning in advance, working with professionals. And so if you can think about advance, you can really come out ahead.
So as Jack mentioned earlier, please understand Jack's joining our show for educational purposes only. This is not financial advice. As always, please seek a qualified financial person before you make any decisions in your life. Jack, what's the best way for people to reach out to you? How can they learn more?
People can get me best way via email is jack@innovativewealth.com, or they can visit the website www.innovativewealth.com.
Jack, appreciate you taking a few moments to join the show. And as always, thanks for being my friend.
Thank you, Kevin.